would like to start by welcoming you to today's Spotlight. Spotlight is about Clean Power Capital. That is the company that we're looking at, but I think we're going to zoom in a lot into one of your investments and operating companies. We'll come back to that afterwards, where I think there's a lot of exciting news going on. For those who don't know your organization yet, could you tell us a little bit more about Clean Power Capital overall? What is your organization about? What kind of organization it is probably important to understand, and where is it focusing on today and why?
First of all, Jos, thank you very much for having me, and welcome everyone. Clean Power Capital Corp is focused on clean energy solutions, particularly related to hydrogen infrastructure. We have some investments, but our main investment is 100% ownership of PowerTap Hydrogen Fueling Corp, which is focused currently on building out hydrogen infrastructure and hydrogen stations in the United States. There's a big dearth of hydrogen stations. There's under 100 currently operational in the United States, with thousands needed over the next 5+ years. And our publicly announced plans are around building out a minimum of 500 stations over the next 5 years.
Yeah, I think you immediately go into indeed where all the excitement is within the organization, PowerTap Hydrogen. And I was looking a bit at your investor deck again. Could you tell us a little bit more about why this is such an interesting opportunity? Like you talk about the need in the market, but why is that need? What is happening? What's happening with the alternative ways of fueling companies? How does it compare with the entire EV developments, electric vehicles and batteries that are generating a lot of noise? You hear much less about hydrogen, but at the same time, you see that there's quite a few companies zooming in and focusing on coming with vehicles that are powered that way. Could you tell us a little bit more about that?
Absolutely. So by no means do we believe that, certainly me personally, that hydrogen is going to displace battery electric vehicles. However, hydrogen vehicles have some very particular advantages over battery electric vehicles. For a certain segment of the consumer car market, if hydrogen vehicles are quicker to recharge versus refuel versus battery electric vehicles, that can take, if you have one, can take an hour or so. That applies for a certain segment of the audience. Think about Uber drivers, Lyft drivers, etc., and people who drive that for commercial reasons. Also, the time, the amount of distance you can go in a hydrogen vehicle is significantly more than a battery electric vehicle. Depending on the vehicle, it can be 50-75% more. So it's a significant impact. Where we view as PowerTap as a clear opportunity are the long haul vehicles. And that's where you've seen a bunch of announcements in the last year for what we would call, I guess, in North America, 18-wheelers. The main technology used there is diesel, which is one of the worst emitters of carbon that's out there. And companies ranging from Toyota, which is the largest automaker in the world, Daimler, Volvo, Hyundai, and then upstarts like Nikola Motors, which went public in the last year on NASDAQ, are focused on hydrogen trucks that have a huge advantage because of that, and because the current technology for batteries just doesn't work because of the size of the battery also needed for long haul trucks. And even though Tesla has talked about long haul trucks and the Tesla Semi, it hasn't happened, and they've been talking about it for 4 years. People within the hydrogen industry just don't believe it's viable, and that's where the big dollars have been deployed. And I think that's the main difference, Jos, currently versus previous generations of talk around hydrogen that have happened over the last 20 years. Ballard Power, which is out of Vancouver, has been around for years. But truly, the difference today is that the OEMs, the automakers, have made announcements and are planning to launch long-haul vehicles. And we think that in the environment, car owners and certainly truck owners particularly want to have greener footprints. They need to have greener footprints for ESG purposes. And again, the vehicles are coming, but the hydrogen fueling stations are missing. And that's our pure play focus, is on hydrogen fueling, not on vehicles, not on hydrogen fuel cells like Ballard Power, but simply on the hydrogen fueling infrastructure with our patented PowerTap solution.
Yeah, and I think why talking indeed a bit about the vehicles and the target market. Well, you need a market, and I think the clear statement and what you put forward is that there's a market. There's a market for this. There's a market for hydrogen vehicles, and that market is growing. And you see more and more investment. And you look at some of the benefits. I'm looking at them in front of me. You talked about it: the driving range, the fueling time, even the cost is meaningful. There's a meaningful differential over there also. And then you come to your point. Yeah, great. So this is part of our future. These types of vehicle are going to be part of our future, but how are we going to make sure that we fuel them in a proper way? And that is where PowerTap Hydrogen pops up, of course, with its offering. Now, looking at the offering, so one, you're looking at, of course, answering a need in the market, and there's a very limited number of those fuel stations today. But then what is very interesting is that it's not only about providing supply, but you're doing it in a very different way. Could you tell us a bit more about that?
Absolutely. The current stations that are out there, and again, there's not many globally, there's only a few hundred globally. Most all the stations buy hydrogen from industrial chemical companies, which we don't believe have a very good carbon footprint. And they ship them in on tanker trucks to individual stations, and they have huge storage facilities. And we've toured around and seen many of them in California. There's about 40 or so, 45 that are operational. And that's a very expensive proposition. And we'd argue that if you're trucking in hydrogen on a diesel truck, it's not very green. Our solution, which was developed over a 20-year period with significant funding from the U.S. Department of Energy, Renault, the automaker, Hess Oil was a shareholder and investor in this previously, is around making hydrogen on site. And so we have a very advanced system that makes hydrogen on site. It captures carbon. So we have a carbon capture system. Our main feedstock, as we'd say in our business, is renewable natural gas. And so we're starting with green input. And what's great about hydrogen is when you put it in a hydrogen vehicle, the only exhaust that comes out of it is steam, water. So it's a beautifully green solution for the marketplace. And we put out a press release in the last few days, really commenting on supply chain issues that have become a very big issue globally for everyone with COVID and such. But what's happened in the hydrogen industry with the few stations that have been out there, there's been shortages. Stations run out of fuel. So the idea that we can make hydrogen at an individual station level, and is a big advantage cost-wise and also from a supply chain perspective. Because if something went wrong in theory at one of our stations, we could ship in hydrogen from another station as needed. We're not dependent on one particular source of hydrogen like the whole industry is. And that's the true differentiating factor, is on-site hydrogen production, Jos.
Yeah, I'm fascinated about that. And then, because what you do is that you provide fuel to a environmental, very friendly way of motion, of moving from one place to the other one. But then the second thing that you do is you produce it in a very environmentally friendly way. And I think you made the point about you don't need to bring it in with a truck using diesel. But the one thing that many people also forget that is a lot of electricity that is used to produce, in this case, we're talking about the electrolysis model, but electricity that is produced to enable this. And I would even say the same for, let's come back to electric vehicles. A lot of the electricity that's produced in our world is particularly in North America, very much driven by old technologies and fossils technologies, and that's something that people tend to forget a little bit. That is, electricity is great once it's in your car, but the way it's produced, particularly in the US and North America, is still quite impactful on the environment. And you come here with an all-in solution, both by enabling a new technology and then by supplying it in a very environmental friendly way. And then what blew me away was the cost. So why is the cost so much lower? Because you have to install those capabilities in every station. So why is the cost so much lower?
Absolutely. I'm going to first make a comment, Jos, on electrolyzers, which is another technology which makes what's called green hydrogen. And our view is that hydrogen production is very much of a geographic play. In a lot of North America, and particularly in the United States, you're absolutely right. The electricity grid is not green. It is fossil fuel based. Some parts like Eastern Canada, Quebec, and Ontario have hydroelectric using water and dams. That's green. But certainly in the United States, that doesn't really exist. Most electricity is made by fossil fuels, and it's very expensive. And I'll give an analogy to some of your audience that are following crypto mining. As an example, a lot of the mining in North America is done in Quebec, where I grew up. I grew up in Montreal, because Hydro-Quebec is the largest hydroelectric player. So you're not mining for Bitcoin in California because it's too expensive. So ultimately, electrolysis or green hydrogen, perhaps in the long run, 10 years, such could make sense, and we're not against it. We just know for today, it is a very expensive solution, and that's why the technology is not being rolled out predominantly. PowerTap generates what we call blue hydrogen, and we'd argue today blue hydrogen, which is sort of an industry definition, which involves using renewable natural gas and carbon capture, because we don't use a lot of electricity and we're using a green input of renewable natural gas, is actually greener than green hydrogen, which is just an industry term. And so the advantages we have, why it's so much cheaper, is that there's an abundance of renewable natural gas in North America. And also we don't use a lot of electricity. And we have a very efficient manufacturing process on site that's developed with lots of IP, what allows us to have this advantage over electrolysis, and then what we call industrial hydrogen, which is shipped in on trucks. Trucking stops are very expensive. And we've surveyed the industry and some of the players that are in the industry, and they pay between around $11 a kilogram for hydrogen, and we'll sell it for about 16. The individual station owners, for the few stations that are out there, we can make it in the, including amortized maintenance, in the $3 or $3.50 range. And this includes, by the way, any government carbon credit incentives that are a huge piece of our business. And we believe will drive a lot of value for our shareholders. And so we have a distinct cost advantage. And we believe that the price of hydrogen for mass adoption for long range vehicles and for consumers, it has to be lower than $16 a kilogram. And so we come with the viable solution that's already been rolled out. Our previous generation of PowerTap units are out there. We don't own them, but it's our technology that was previously deployed in the United States. What we're doing is we've acquired this technology, we've upgraded it significantly over the last year, and now we're rolling it out to meet the demands of cars and then long haul trucks.
Yeah, I think you are the ultimate example of what I would call the innovation economy, and I think building solutions to to enable today, in fact, the way that many of us are going to be living tomorrow. Before I move to the next topic, and then you used carbon credits now, I definitely want to come back to that. I think you answered the question already, to be very honest, but I just want to make sure we're specific. Which green energy supply, battery or hydrogen, has a larger carbon footprint in your eyes? I think we kind of covered it, but I'll let you maybe give a very clear answer.
Well, I think that certainly if you look at the fuels, gas and diesel have significant carbon emission issues. But when you look at different types of hydrogen production, there's really three broad types of hydrogen production that are around globally. The dominant is what we call gray hydrogen, which is produced at industrial plants by chemical companies and shipped. If we're talking about the station market, very large carbon footprint because of we believe a lot of lack of carbon capture, but as importantly, the transportation mode in trucks is not very green. And then again, talking about green hydrogen, which is an excellent technology and perhaps the future or the long run future, if you look 10 or 20 years down the road, it's not economically feasible. It'll cost similar $10, $12 a kilogram to make. And even if you have a perfect solution, if it's not cost effective, there won't be vehicle adoption. And secondly, just to reiterate, if the electricity being used is not green electricity, and most electricity in North America, and let's focus on the United States, is not green, then it's not a green solution from our perspective. And so I think if people go to PowerTapFuels.com, our website, and look at some of the industry articles, there's plenty of press out there from the broad-based industry that notes this, that green is actually not green. And so it may be one day, but we believe that the PowerTap blue hydrogen solution is the solution for today. We're talking about 2021, 2022, the near term, the next 10 years.
And that is probably a bit the same comment versus, because the question was specifically focused on hydrogen versus battery. And I think hydrogen, you have to look at, as you said, different buckets. But I think the same comment can probably be made for battery and electricity. That is that the production of electricity is still a challenge, particularly in the US. And we can all think that it will change, but I think we all probably know it's going to change, even though you sometimes wonder when you see some advertising. But it's going to take 10, 20 years.
Agreed.
And in the meantime, we need solutions. And I think that's a bit the point that you are making. Let's move to a different part of the story, Raghu, and your revenues. Like, how would you define the revenues of your organization? Because everyone is going to think immediately about, selling your solutions or having your stations, which, by the way, you are doing in a partnership. Just maybe worthwhile to say a few words about also. But there's more than that. You have IP. You mentioned carbon credits. You're doing some great things with the U.S. governance, but that is less revenue. That is more on the funding, of course. Could you tell us a little bit more about your financial model, in fact?
Absolutely, and so there would be two distinct types of revenues we would have, and this would be very similar to Tesla. If I'm going to use the largest green company in the world, certainly by market cap, we would generate revenue by selling hydrogen to vehicle owners at the individual station level. But we also have some very attractive carbon credits. One particular, and people look at our press releases. We've talked about this extensively, even in the last few weeks. Part of the challenge within the industry has been this chicken and egg challenge, meaning that the station owners like ourselves want to know when the vehicles are coming, and the vehicle companies want to know when the stations are coming. And so California launched, which is the largest state in the United States and the fifth largest economy in the world. It's a country in the South. It's bigger than Canada, just to give a breadth for, I'm sure your listeners know that, but to reiterate that, came out with an infrastructure credit. And so we will generate, if we deploy a station, and it's in our presentation on our website, in the $5 million or so per station installed, we generate, just for having hydrogen available, even prior to selling a hydrogen, over $2 million a year, not one time, a year for 15 years of carbon credits. And a carbon credit market is a $300 billion market globally. Tesla is the best known player that has generated, frankly, its profitability today is because of carbon credits versus selling vehicles. If anyone does the work,
people don't realize that.
If you look at,
lots of people don't realize that. Yeah.
Take a look at the Tesla's profitability and recent inclusion in the S&P 500, which is wonderful. Is largely because of carbon credits they generate, which are completely different than ours, but it's the same global United States and global market. That's significant for us because that allows us to build out stations and have cash flow without exactly knowing when these vehicles are coming. There's been lots of announcements, and we believe the first hydrogen long haul trucks. There are hydrogen cars on the market, by the way. Toyota has a car called the Mirai that's available in some parts of the US and some parts of Canada, particularly in the Western Canada, I think in British Columbia, but not necessarily in a huge way. And more of those vehicles are hitting the market. BMW is launching a vehicle too. But if we focus on the trucking market, the large OEMs and Nikola have talked about vehicles hitting the market, let's say by early 2023. So in about a year and a half or so. If we get stations up end of this year into early next year, they're sitting and waiting, but we generate revenue while we're waiting, and very attractive revenue. If you look at that revenue as a percentage of what we've spent per station, it's extremely attractive. We have a very attractive economic model. Our model also for deployment, noting a partnership, is because we have a small footprint, we're not going out to build out our, at this stage, huge standalone stations. We are partnering with existing gas stations and truck stop owners. And to give your audience a framework around that, there are between 100, 150,000 gas stations and truck stops in the United States. Massive audience. We announced our first partnership with the Andretti Group, led by Michael and Mario Andretti of auto racing fame. And they own themselves 100 and something stations in the Western US and growing because they continue to organically grow and buy other businesses. And they're also going to play a distribution partner for us because, frankly, the Andrettis are one of the best known brands within the automotive industry. And so their stations are actually not under their own banner. They're under brands like Shell, as an example. And so, they're going to play a distribution partner for us. They help us validate our technology. They revenue share, they get a minority revenue share, but we don't have to worry about buying land or getting into this real estate game. We can focus our capital expenditures on technology because we're a technology company. And so they win, and then we win because we also have speed of deployment, because with 100,000 plus stations already out there, a lot of the good locations are already taken. But we don't need many of those appropriate stations to build a really nice footprint if we're looking to build out 500 or so. If you look at 500 out of 100,000 total addressable stations that are out there, there's plenty of room for our stations. And we know that already because we've done the work. And so that's why it's an exciting partnership. It allows us for accelerated deployment because we have locations. A lot of the locations are already set up, frankly, for vehicle fueling. They've been zoned in that way. And so there's just an advantage for us. That doesn't work for other technologies because of this issue with storage. The storage tanks are so big that their footprint are multiple times the size of our footprint.
I saw that in some of the pictures that you have, but I cannot, Raghu, stress enough, underline enough, the importance of the components that you just put forward, and that it's very important for investors to understand. That is that your business model is in fact extremely interesting, in the sense that you have that access to those carbon credits, which gives you revenue, and we know how those markets are developing across the world. I think I think the potential is probably going to be higher than the figures we even talked about earlier. And then two, the very limited capital outlay to enable this, and then doing that, in some great partnerships. I think it's a very important message for everyone to understand, because you're not only, a growth company that is, now investing and trying to unlock that revenue. You invest less than you already have revenue that is going to emerge pretty much, that is there, and that is quite unique in the entire growth space. Now, if I'm an investor, because we're running a bit out of time here, if I'm an investor, why should I invest in you today? Should I invest in you today? Am I too late, or should I wait another 6 months? What is your view on that? And I know you're going to say today, but I would like to understand why.
Well, I think we have an established technology. We have a revenue model that does not, because of the particular carbon credits we get, have to predict the timing of the vehicles, which we'd normally be in an early stage industry trying to pick in time. That is the challenge. We don't have that challenge. That's what we have as a very unique story. We believe we're getting a lot of good industry press. We were featured in Car and Driver magazine, which is the iconic magazine, a couple of weeks ago. We've been featured in Forbes. We believe we're a thought leader within the space, but we're also a unique play within the hydrogen space. There are other companies out there. If you look at our deck, there are a few other large companies, Ballard Power being, for Canadians, certainly the best known, but they're not in our business. They make fuel cells, which is a key part of the engine piece of that. But there's other players. We are a pure play on hydrogen infrastructure. And if anyone looks at the needs within the industry, every industry article talks about the lack of infrastructure, and that's our sole focus. We're not going to divert from that. Because that's where we believe is the biggest addressable market for us. And so I think if someone's looking in their portfolio, depending on the risk parameters, about having some exposure to clean energy infrastructure that's coming, certainly things are happening on the battery electric vehicle side, and there's companies like ChargePoint that have gone public and such, but that market's more mature. If someone wants exposure to early stage hydrogen infrastructure, we believe we're an attractive story that people should take a look at.
And look at now, because you want to be there when you're at the beginning of that growth strategy. You don't want to come in when everyone else is coming in, or you don't want to follow a hype. And is it fair to assume that you are not going to invest money in Bitcoin tomorrow?
There's
I'm
no
just
plan.
kidding. I'm just kidding, Raghu.
I'm
just comparing to some other people in the space.
Absolutely.
But then you have a pretty solid IP portfolio also, and yes. I think like a great team that you can leverage with a lot of experience. We are at the end of our session. It went by very quickly, so it's a very enjoyable session, I got to admit. But we'll take 2 more minutes. One, to answer a question here. When do you expect the technology to be rolled out on a massive scale? And I think, as you said earlier, there's always a bit of uncertainty around when are we going to see a massive rollout of the vehicles? But that is where your strategy works very interestingly. But from a technology perspective, when do you think we're going to see that moving, in an accelerated way? I think you answered it a little bit, but maybe ask you to summarize, and then plans outside of North America. The world is
absolutely
big.
Absolutely. Great questions. In terms of the rollout, our publicly announced plans are to start a rollout in late 2021 and really accelerated in 2022, which is still in advance of when the vehicles are hitting the market. We want to get the infrastructure in place with our joint venture partners. And so you'll see further announcements on that. And in terms of international partnerships, you're absolutely right. The PowerTap blue hydrogen solution has applications in markets, certainly outside of the United States. US is the biggest market, but there are others, including Canada. We're in plenty of other similar joint venture type discussions with other companies and such with international footprints. So I tell everyone to stay tuned. We've gotten a lot of good attention, and we're choosing appropriate partners for other markets.
That's exciting. There's probably there's a big opportunity in the developed world, of course. But what I always find very interesting, and that's my thought I will leave with you, is to look at the less developed world, where you are usually facing an interesting opportunity to jump technologies and jump worlds, and where people are very open to that. Best example is always how a country like I think it was Kenya never really got on classical phones, but moved immediately to mobile phones, and I think there's lots of interesting opportunities of that nature. Last question for you, Raghu. I think I have to ask you, why did you come to NEO?
We came to NEO to get a great base of new investors. Your team has been excellent to deal with. We have announced plans to look to cross-list in the United States, which is our prime market on NASDAQ. And so everyone should stay tuned to that. But we believe that the NEO for us is the best platform for a global story like we have, but having our base parent company be Canadian.
Yeah, I appreciate that, and I think it's it's a tier one exchange in Canada, so it makes a big difference to your point, and it allows indeed to open up to institutional investors. It comes with a different level of service of who our competitor is, which ultimately, let's call the name, that's a TSX, and I think we have some different approaches on things over there, and one of them where we're definitely different is we're very supportive of dual listings, because we think at the end of the day we have to help and enable you to be successful, and that is what an exchange should be all about. So we're very happy to have you on board. And you can
very happy to be on the NEO.
And you can continue to count on us as a strong partner in not only before you listed, but in the days to come, the months to come, and the years to come.